Hi, welcome back to my channel. My name is Natalie. In today's episode, I'm gonna show you how XRP actually broke this trend line that we did have, and it broke to the upside, came back down, retested it, and then continued up. If you missed that trade, we definitely have more entries during the week that we can jump into, because right now we can see that all of the three pairs, Bitcoin, Ethereum, and XRP, are moving to the upside. But we do have to be patient and wait for the market to come back down to our favor for us to be able to have a profitable entry as possible. Continue watching this video and I'm gonna show you exactly where our entries can potentially be. Let's start with XRP, and we can see that we are going upward a little bit. You can see on the lower time frames that the market did break the trend line that we did have. So I did take the trend line from this wick up here, and you can see that we did actually break the last lower high, because you can see the market is doing lower lows, lower high, lower lows. And this was a small lower high that we did have, and this was the last low. And what the market did, what it did actually break this trend line that we had, came back down a little bit more, but it did retest the trend line, and it did break the previous higher low, lower high, and then it just continued up. If you were unsure about taking a trade from there, you could definitely have taken it, because you can see that it did break this previous lower high. We could also have taken the Fibonacci level from the low, and that's 1.2489 to the high, and that is 1.2688. And the market did come down and just retested the 50%. And I'm using the Fibonacci levels. I always use it from the body of the candlestick. I never use it on the wicks. That's just how I do it. There's nothing wrong, there's nothing right, but just that's how I use my Fibonacci. So from the body to body. And you could see that the market came back down and retested it. And it also broke the previous lower high that we had. So we could see that the market did actually break to the upside. And if you were unsure on, because when you're using the lower time frames, you can definitely be confused. You can go up to the higher time frames, and when you're looking at the higher time frames, you could see that we had a huge candle to the upside on the 1 hour. And so we did actually have a huge spike to the upside, and then the market did retest it. You had one, two, three candlestick, maybe four, that just retested this area right here that we did have. So this was actually a very good way to take a buy. You can see that the market had, this was a previous support that we had. This was a support broke to the downside, came back up, gave us a resistance for a couple of hours, came back down, broke the trend line, broke to the upside, and turned previous resistance into support. But it's also been support before. So this is why I'm telling you guys, it's really important to use the levels, the zones, when you are trading. I'm gonna show you an example on how not to do it, because it's really perfect when you see it. And on the higher time frames, we are still just consolidating, but we are at the top of the resistance right now. So I'm having the drawing since yesterday, and this is actually what we wanted to do. We wanted to break to the upside, then come back down and retest this zone that we're having, and that's around 1.3048. But we want the market to break. But this is why when you're using the lower time frames, you can have a early entry, so you don't have to wait for the market to break on the higher time frames. But that's when you're getting more comfortable of using the higher time frames, break it down to the lower, and also depends on how advanced you are and for how long you've been looking at the charts. But you could definitely have taken a buy order based on the trend line when the market broke it. But if you missed that trade, we can take copy and paste it to the heights, from the low to the higher time frames. So what we want the market to do, obviously, we want the market to break to the upside, come back down again based on the higher time frames, because this is where we are right now. And when we're taking the trades off of the lower time frames, we are looking for smaller resistance that we are trading from turning into support, because you can see that this zone right here is pretty huge. So we don't actually know if we're using a zone like this on the lower time frames. It's gonna confuse us because we don't know if it's actually breaking to the downside or to the upside. So for example, if we are trying to find a resistance around here, obviously now the market hasn't done anything, but what we can do is that we can make the box smaller, and we're taking the previous resistance around here, because you can see on the higher time frames that's actually a little bit above, but that's okay. But just to make sure that you have an understanding of how it can look like. So I never have huge boxes on the lower time frame. I always trying to find smaller ones. Now for XRP, we definitely, because if you missed this trade right here, you definitely want the market to come to this zone, and that's 1.3179. And obviously if the market comes back down and give us some resistance around here, because if you remembered, we have a pretty huge zone from the higher time frame. So, but we have to wait and see what the market will do next. But this is right now, this is a zone that we have to wait for the market to come to and react to it. So we have on XRP, we have to wait a little bit more. If we're looking at Bitcoin, Bitcoin just spiked right up. We did have this consolidation since yesterday that we were in, and I told you that we're never ever trading inside of a consolidation, and you can see why, because the market can give you a resistance, come back down, and you think the market will continue up. Market comes back up, and it will take your stop loss out. It will take you out in drawdown, and now you lost money because you couldn't wait for the market to come to a zone, support resistance zones, and now you just lost your money. And that's just not something that we are gonna do. We have to wait for the market to break. So right now we can see that Bitcoin did break this consolidation, this resistance that we did have, and we can see that the market is in a uptrend. So this is really good. The market never came back down to this resistance that we had. It can't do that, because right now we're not buying anything either, because we just have a huge spike to the upside. You can also see here that we were talking about before that we do have this double bottom right here, and you have the neckline around here, and the market can come down again and retest it, and then might just continue to spike to the upside. That's something we have to wait and see right now, but the market is on its way up. If we're looking at the 4-hour, we're still doing higher highs and higher lows. You had a higher high, higher low, higher high, higher low, and maybe right now the market is actually making another higher high. So what we have to wait and see, if the market continues up, we need the pullback, because we want to buy the market as low as possible. So what we can do at that time, we can take the Fibonacci from the low, and that is 49751 or 61, yes. And when we see a candlestick to the downside, we are taking our Fibonacci from that candlestick. So for example, it should look like this. So if I take this Fibonacci, I take it from the low, and that's 49325, and I take it to the high, and that's 50640, it's 50640, and I take it based on that I see that the market is giving me a pullback. So when I see a red candle like this, I'm taking my Fibonacci. I need a red candle. I need a bearish candle for me to find my highest point of the Fibonacci that I'm using. So right now I can't have a Fibonacci, because the only thing that I'm having is the low right now. So I need the high. But when the high is made, I want a bearish candle to the downside for me to be able to put my Fibonacci on the highest point to it. So if the market comes back up here, give us a bearish red candlestick, I take my Fibonacci, and after that I wait and see if the market comes back down to my 50 and 61% level of the Fibonacci. But we can look at the lower time frames right now. Obviously it's the same thing, but what we can do around here on the lower time frame is that we can combine these levels. Right now I do not know where the Fibonacci will be, because on the lower time frames I can't put a Fibonacci either, because I do not have the red candlestick. But this is something that we can use. We can use this resistance that we do have on the lower time frames, and we can see if the market comes back down here, we can take a trade of the resistance turning into support if the market shows rejections. And hopefully we do have a Fibonacci on the higher time frames that actually match up with the lower time frames resistance. And the market can obviously continue down again and retest it and continue to the downside. That we do not know right now, because the market is just spiking up. So right now we also have to just wait and see and to what the market will do. But the good thing is the market did actually break this resistance, so now we're waiting to see how the market will react to it. And if we're looking at Ethereum, we have the same scenario right here. We look at the higher time frames right now, and the market hasn't shown us any signs to buy the market on the higher time frames. If you go to the lower time frames, you could definitely see that the market came back down to retest this high that we did have here, this resistance. So the market spiked through, came back down, retested this support, this resistance that we had, and that was 3909. And it showed us rejections. You had 1, 2, 3, 4 wicks, and the market did close above the whole time. You could see that this candle did close above it, and then the market did continue up. You also had an engulfing candle right here. You see that this was an engulfing candle because it did engulf this bearish candle that we had that closed. A bullish engulfing candle, and then you could have bought when this candle closed. Just because you cannot see things on the higher time frames, that doesn't mean that the market doesn't show any signs to buy or sell the market on the lower time frames, because remember, that's how we do it. You go from the higher time frames and then you go back to the lower time frames, you're combining those two together, and then you're finding your entries on the lower time frames, and you exit the trade and just wait and see what's gonna happen. Is it gonna be to your favor or not? That we don't know. But that's why we're using the zones to make sure that we are at a good place to buy and sell. Because if you are just buying around these consolidations that we do have, or if you're trying to buy at the highest point right here, you do not want to do that. You don't want to buy the market right here. You want the market to come back down again to a zone, to a resistance. That's what you want to do. You're waiting. You have to wait and see what the market will do, or if it's going to break to the downside. So right now, for all of the three pairs that we're having, we do want to wait to see when if the market comes back down. I still have this Fibonacci level since yesterday. Important level on Ethereum right now is between 3825 and 3854. If the market comes back down here again, we definitely want to see what the market will do. It can also break to the downside, retest it, and then continues down a little bit more, because if we're looking at the higher time frames are pretty high up, the market can continue, but I mean, it's very good if the market comes back down a little bit more for us to see if we can have a lower entry of the pairs that we are trading. This is also a potential. I remember I did talk about this before, and I still have the zones on because obviously I want to see if the market breaks to the downside. And I have these zones to make sure that, okay, where are we? What are we doing? And after that, I exit my trades. If you like this video, Please give it a thumbs up. Please comment below if there's something you're wondering. Subscribe to my channel. We're gonna go through these pairs every single day together. Have a good week. Trade with risk management, and we see each other tomorrow.